Hello and welcome. I'm Sinon. It is 12:39 a.m. South African Standard Time. Today it's Saturday. I'm going to look at a chart of UK100 on the monthly as well as the weekly time frame, but most importantly, the monthly time frame. So I'm going to make sure this video is very brief and my voice is very unusual. I'm sure most of you will notice because I happen to have flu. So this is my current count at at the moment. If you look here, this is all the available data from I think just slightly before the 1987 crash. So somewhere there at the beginning of April of 1986. So if you recall, some of you, we did have a crash in 1987, which was very sharp and quick, and there it is. So I believe it was the fourth wave based on what I'm seeing here. Why? Because if you look here, for example, let me just show you using the line chart, which by the way, Elliott himself used in order to come up with his own principle. So if you look here, we have one, two, three, four, five of the third, and then one, two, three, four, five, and then I think that's one, two. And then I think we have one, two, three, four, five. I think that's one, two. And then we have three, and then four. And then I believe after that we have one, two, and maybe say three, four, five, or somewhere there. I think I will have to shift in between. Yeah, one, two, three, four, five, right there, or one, two, three, four, five, one of the two. And then one, two, okay, one, two, three, four, yep, five, one, two, three, four, five. But you can clearly see the size of this correction is a bit larger compared to the size of this one right here. It might be the fourth wave, it might not be, but in this case, I would love to consider say an ending diagonal following this guy right here. So I think this is one, two, three, four, five, and then I think we have one, two, three, four, five, and then one, two. It doesn't matter anyway what's happening here, but this is clearly five waves to the upside, which you can count on your own. So the current count is as follows, starting from the peak here of the third wave, and then we have wave A, B, C, D of a triangle, wave four. Now, if you consider this part right here, it does look impulsive. Myself, I am considering a possibility of five waves to the upside. But if that's the case, two things perhaps would be happening right now. Although I want to mention one of them, just one only. I believe if it were the case that this is five waves, then we'd have three and then four and then one, two, and then a possible like series of ones and twos here, suggesting a wave extension to the upside. But sticking, like to the simple things, as the Occam's razor say, you don't have to overcomplicate things beyond necessity. I will just stick to the triangle. Now, why am I considering the triangle? First of all, our wave E right here does overlap with wave A, and that's the most important part of a triangle. Well, one of the most important rules of a triangle, that wave E as well as A overlap, and you can clearly see that there is an overlap between this part right here as well as this part of wave E. And then we have this diagonal. Now, here I have two things happening within this diagonal. I wouldn't say this is a third wave of a much bigger degree, considering this correction was brief. And on top of that, the correction didn't take out this low of what I've labeled here as wave E bottom, which is at 47.83. So I think we have wave one and then two, suggesting a wave extension to the upside for the fifth wave. And if you can look here, right here, look at how well the moving average is, the 20, the 50, as well as the 100. Let us also add the 200, which I also like very much. Look at how well all of these guys um, are holding. So this is to me suggesting that, hey, what's happening? This is to me suggesting that, hey, we are in a, like a possible long-term bull run. Hence, I have labeled it here. Now, it is a bit confusing to do a wave count on this little guy right here because of, two factors. But anyways, for now, I will monitor this wave count, suggesting that you have one, two, and we are now within wave two of like the third wave of the intermediate degree. So I really don't know, but I will keep on updating you because right now, this diagonal, if you look at it, you can actually perform a count and get five waves, like that is a 5 3 5 3 5 diagonal, especially with wave 5. It's so clear that it is indeed the type of diagonal you'd consider uh only for wave 1 or a, which is the 5 3 5 3 5. That is the formation. But at the same time, you can also get to count it as a 3 3 3 3 3 diagonal. So, complicating things a bit. But sticking with a possible wave extension for me, I believe is gonna do it, rather than, I don't know, thinking like the Elliott Wave International. Now, I'm not dooming my seniors or saying anything bad about them. I mean, those guys have been in the game for like 30 plus years, using the waves, applying them. But then I'm not believing yet, when it comes to the end of all things. I think it's too early. Of course, there are trade wars, etc., that are going on. But considering this part right here of like a 1 2 1 2, I think it's just gonna do it for me. Now, why do I think we have a series of ones and twos? First of all, a flat to the upside at this point would be a bit difficult, and it would be a bit upset. I think, for example, saying this is A, B. Well, first of all, we have to understand that if we are at this degree, which is considering a long-term bull run that began at the beginning of 1800, it would mean that a correction that will follow cannot begin with something like a flat. Yes, you can count and come up with a flat here, but it cannot begin with a flat. I mean, it would have to have a very deep wave sit to the downside. So the orthodox top would have to be the highest of all highs if we are considering, a major crash in the market or major correction. And considering a flat, it would be difficult to count this as a complex structure. And believe me, it would be, in as much as you'd have five here, how would you count this part right here? How would you, deal with this part? So I don't want to consider the worst of all things. And besides, if we are to add, say, the weekly time frame, it's even more interesting to look at how I was busy and kind of missed what was happening. And look at how beautiful right there our fifth wave is. And hence I'm suggesting, both the 3 3 3 as well as the 5 3 5 3 5 formation for the diagonal wave one. So it's clear here, it's either we have a W, X, Y, or we can have a triangle here, considering, that we might maneuver, the count here in many possible ways. But anyways, my interest lies here from this low here of wave 2. The wave count, if you look here using the line chart, you can clearly see we have 5 waves to the upside for wave 1 of, I believe, the minute degree or minute degree, which is degree 10, and then 1 2, and then we have our wave 3 right there. And you can clearly see, I mean, the beauty here just by simply using the line chart instead of like the bars, because there's a lot of noise. In fact, it would be even more terrible to use candlesticks. So the more you use like a simpler charting style, the better. For example, candlesticks have a lot of noise, which is why people love them so much when they are looking at the raw price action. And then bars don't give you that much information when you compare them to Japanese candlesticks. And the line chart doesn't give you much information when you compare it to the bar. So if a wave count is a bit complex, you want to use a chart that is gonna give you, the greatest simplicity possible. And in this case, I don't see any chart that can do that better than the line chart, as Elliott did when he was discovering the wave principle. So again, we have 1 2, and then that's a third wave, and you can see this sideways movement, which is not so deep compared to this one, or sharp in nature, and it's a bit sideways. Although we do have a high here that exceeds this one, which is, now this is the orthodox top compared like to the bar chart, of which, if you look here, this is the top and not this one. But anyways, these things happen. So if you look at this one, it suggests that our diagonal was kind of extended here. Now, I didn't do the internal wave count on lower time frames because I have been tracking this part, and especially this part. If for those of you who follow me, I did do a wave count from this low right here, and then there of which then I believe I stopped following the markets around this time, because that's when I started working at the trading lounge. But anyways, if you look here, I think this is one, and then two, and then three, four, five. Now you know the rules of a leading, I mean of a diagonal, like the contracting variety. Well, first of all, the overlap is not a necessity between wave one as well as wave four. It's not a necessity now anymore, like a rule, but it is compulsory that wave four is smaller than wave two, and wave five is smaller than wave three. Now, wave one doesn't have to be longer than wave three. Most of the time these days, you will see wave three being the longest sub wave within a diagonal. Although I believe here wave one was actually the longest, as you can see right there. But you can clearly see, following this decline here from the peak of wave one of the minor degree, it was swift in nature, and it quickly took out the stops of the people who went long around this region, which is also suggestive of a diagonal scenario, or like an event following the completion of a diagonal, and that is what we saw here. Now the question is, given that it's a long-term bull market, how long or deep will we retrace here? But for me, I want to say that at least we should reach this level right here, say the extremity of the fourth wave. Okay, let me delete that and just use this one. I want to say that we should reach at least the extremity of the fourth wave. Why is that? The guideline of depth of the waves, or like the behavior of the wave or market following the completion of an impulse. I believe we should reach this price area right here, which is 67.05, because again, at least that will be the minimum or bare minimum retracement having been fulfilled. And I believe there I can say that's our wave to, considering that already there are fears of recession, of which it will come and catch people not expecting it. And if you look here, I like the fact that we saw a throw over. This is so beautiful. Now, what are my expectations of this guy? I just stated them. You probably are asking yourselves. I would love to see a decline at least towards this level, because as you can see here, it was not so deep. But does that mean the market, might continue and going up without going down there? Of course, it might, but we'll have to wait and see what it will do around this price area, considering now that we have reached the line, an extension of the line that connects the extremity of wave 2 and 4, which is there. And I think we might find a bit of resistance and push lower towards 67.05 before, you know, before going up, and beginning with wave three of the minor degree. So right now, I just want to stay out of the market perhaps and wait for it to give clear structure, because I really don't like what's happening right now. Because what happens is it moves too fast. I mean, it moves too fast, and the chances are we will get to see a flat, or perhaps this could be one, two, three, and then you could be having a very deep wave four, and possibilities of that happening are very high. Let me just draw something like the Kennedy base channel, and you can see we might find a center line reversal before we continue to push lower here. Or perhaps this could be A, B, C of W, and then this could be X, and then A, B, C, Y, or perhaps another zigzag for a triple zigzag. Or this could be A, B, C of wave A within a bigger flat. So we just don't know what's going to happen. But considering the time wave one took, this price might be, like about to take a bit of, a longer period of time than we are anticipating it. So, anyways, right now, I would suggest that people wait a bit and see what the market is telling them, because the market always communicates. And if you're a fan of this guy, I believe it's ICT, I think we are having what we call the fair value gap right now. If you look here, this is what we call a fair value gap. Let me just add the middle line so that you will see. And we have retraced there. You look here, I think this is, but I think the right way of drawing it is here. But then I would love to consider this part and say this is the fair value gap, because originally the fair value gap was by Steve Nissen's like in some of his work. So if you understand how Steve Nissen actually worked with candlestick, you'll also understand the better way of drawing the fair value gap using his method rather than the one of ICT. Now, I'm not saying anything about ICT, but I'm just saying it's good to know, multiple ways of drawing something or applying a certain technique. But I don't know, guys. It's up to you at this point. But for me, I would suggest that people wait. Like I would really suggest that people wait, because you look at this range right here. We have a bar pattern which I will not mention for now. But you look at this range right here and this one, it's so big, and chances are this bar, because it has already closed within this range. So this is what we call an a pop gun. This is what we call a pop gun right here. So I believe it's still going to be a bit difficult. I don't want to do any trading as long as we're still in between, or trading in between the range of like these two bars combined, this one as well as this one. Well, ladies and gentlemen, that does it for today, and it's been some time, that I have released a video. But I don't know, because we have done some upgrades not so long ago. If you check the logo, we have a new logo, which means that we are back within the like YouTube industry, I might say, and we're probably going to release some videos. Anyways, have a good one. This is just something I wanted to share with you.